Hello and welcome back to All Things Money. My name is David Blain, your host for the show today. We thank you for joining us. We're having a little bit of fun today going through a list of 16 meaningless market phrases that will make you sound smart on CNBC. This comes from the Business Insider, Henry Blodgett. This was from June 16th of 2011. So we're using his 16 phrases that if you watch CNBC a lot or the Business Network, you hear these things a lot and they sound really smart, but if you really analyze them and think about them, they're actually pretty meaningless. So we're just having a little bit of fun with these today. So before the break we were talking about it's not a stock market, it's a market of stocks. And you hear this a lot. The guests on the show, I mean, they use it just about any time, and it sounds deeply profound. I mean, the kind of thing, the wisdom that only from great experience could someone come up with such a phrase. But if you think about it, it's a statement of the obvious that has no meaning, that of course the stock market is made up of stocks. I mean, that's what the stock market is, and so it just has no meaning whatsoever, but it sounds really good, and it sounds like the person saying it has some sort of inside information that's going to allow them to make a whole bunch of money while you sitting at home, or not. Okay, the next one. We're constructive on the market, and you hear this from analysts, and they say, well, what's your firm's outlook on the stock market? Well, we're constructive on the market. And like many of these phrases, it sounds pretty optimistic, but it's essentially meaningless. It doesn't commit them to any specific recommendation. It doesn't commit them to any plan of action. I mean, how do you go out and buy or sell constructive on the market? I mean, what exactly does it mean? It doesn't instruct the viewer as to a good long-term investing strategy or anything like that. It's generally optimistic over some unspecified time to do some unspecified action. I mean, it could mean anything. All right, the next two kind of go together. First of all, stocks are down on profit taking, and then stocks are up on bargain hunting, and we'll kind of treat these two together. So when do analysts use this? Anytime that you're asked to explain why the market or stock is down after a strong run. So for example, the past 4 or 5 weeks, the S&P 500 has been going down. And so you hear this a lot. Well, the market is down on profit taking. And it really makes you sound like you know what's going on and that you have some sort of insight into people that have made a lot of money on stocks, and so they're taking profit from those. Once again, it doesn't actually commit you to anything. It doesn't say what the individual person should do with their stocks. Should they be taking profits? Well, what if they don't have a profit? Should they stay the long term? So it's really kind of meaningless, and there are literally millions and millions of people selling stock every day for various reasons. It could be, just think in our firm, the reasons we sell stocks on every day, just about we have to sell something, maybe tuition for somebody's college. Some of our retirees get a monthly check, every month. We have people that maybe they're fixing their house up. Maybe they have medical bills. Maybe they're just diversifying. Somebody comes into the firm with a big position of, some bank stock or something like that. Well, we're going to sell part of that to diversify their portfolio. So there are literally thousands of reasons that people sell stock every day. And so for an analyst to come up there and say that people are taking stocks on profit taking, it's just sort of meaningless. The same thing with bargain hunting. Once again, it makes the person sound like they know what the professional investors are doing. It doesn't commit them to a specific recommendation. It doesn't say you should be buying stock. It doesn't say you should be selling stock. It just says that people are bargain hunting. Once again, whenever someone buys or sells a stock, there's always two people that trade. So if stocks are down on profit taking, then there's just as many people on the other side that are buying the stocks. And so how do you know if people are profit taking or bargain hunting? And to some extent it's supply and demand. If you have more people selling, then the stocks are going down. And if you have more people buying, then more people are buying. But once again, people buy stocks every day for different reasons. One of the biggest ones is you have people investing in their 401ks every day, that money gets put to use. You have people dollar cost averaging. You have people receiving inheritances. And another reason you have people buying is covering shorts. The short sellers, if they sell something short, they have to buy back that stock to cover their short. So to imply that stocks are up or down on profit taking or bargain hunting is a gross oversimplification and really doesn't say a whole lot. The next phrase, there are more buyers than sellers. This is also used anytime to explain why stocks or the markets are going up. Now this does have some meaning, as I just mentioned, the supply and demand. When there are more buyers than sellers, and actually you don't know if there are more buyers than sellers. What you know is there was more people wanting to buy that day or more shares being bought than sold. But once again, it implies that you know something about the market that's going on, where really it's just a statement of the obvious, a statement of fact, and it doesn't really give much insight into what the average investor should do. So we're coming up on another break. When we come back, we'll continue along this theme. For All Things Money, I'm David Blain.